Let's bring in Kenny Polcari, principal with Butcher Joseph Asset Management and a CNBC contributor. Kenny, how does the setup look to you ahead of Powell's speech?
So what does it look like? Clearly, the futures are down. I think that's more China than it is the Powell speech. But look, here's the issue. Jay Powell, it is not on the agenda for Jay Powell to discuss U.S. interest rate policy at this particular meeting. That's not what the symposium is about, and nor should he feel forced to have to justify or not U.S. interest rate policy going into today's speech. It should be about the agenda, which is changes in monetary policy or challenges to monetary policy since the great financial crisis. So I think there's a disconnect here between what he should say based on the agenda and what people expect him to say, because they're all screaming that they want a rate cut. And so I think there's a disconnect there. So quite honestly, I actually hope he talks about challenges to monetary policy and not about where we're going in the U.S. economy. You guys have done that. We've had plenty of conversations with Fed regional presidents. We understand how they feel. We get it. It's been in the minutes, but I think that's what he should do. Now, whether or not he does it is going to be a different story. And if he doesn't address it, then watch how the market reacts. You can imagine, Sarah, and we've been through this before, if the market doesn't hear what it wants to hear, then it's going to throw a hissy fit, and the algos are going to go crazy, and the liquidity is going to drive by the buy side, and the market's going to convulse. If he pacifies them and tells them or says or indicates what they want to hear, then the market will stabilize and probably, attempt to rally off the weakness this morning.
Kenny, as we do kind of build up these questions about Fed policy, as we examine every tick in the yield curve and all the rest of it that's gone on, you dial back a little bit. The S&P from late July had about a 6 or 7% pullback. You've bounced and recovered about half of that. We're trading in a range. What does the market response in a bigger sense tell you? Is the market whistling past the graveyard, or is it saying that maybe the stakes aren't as high as we're making them out economically? I don't know.
No, I think what it shows you is that there's a high amount of angst, I think, in the market right now. Look, we are back closer to the highs than we've been, and yet there are all these concerns that we keep talking about. The latest one being the inversion of the yield curve, which has now done it 3 times for a brief moment, but it's done it now 3 times, and everyone's making it like it's the end of the world. Meanwhile, the other 6 or 7 or 8 signals that the Fed looks at that we should be looking at to indicate whether the recession is here or not here are still mostly positive. And so therefore, this hype and this angst over the recession is coming, it's coming. Look, it is coming at some point. Of course it's coming, but it's not here today. It's not here now. But I think the market is just anxious at the moment based on kind of all the chatter surrounding everything else, right? Interest rates and the China trade policy, whether or not we're going to have one, we're not going to have one, when's it going to happen, what's going to happen with interest rates. And so I think the market's just nervous. And I think the path of least resistance at the moment at this level where we are, 29.30, is to the downside and not to the upside.
Kenny Polcari, good to check in with you, sir.